Hey guys, we're getting into why AI is going to dominate the market and how much we're going to be seeing over the coming years and how much it's going to snowball over time. So, disclaimer, this is only for educational purposes only. You should consult a financial advice from a financial advisor. So, first things first, almost everybody knows that productivity is going to potentially skyrocket with AI. When you have automation and things being automatically done, it's going to boost efficiency. I mean, if every employee had a personal AI robot, you could double production, theoretically, and you can have twice the output or three times the output, or depending on how many of these you have. I mean, who knows how much it's going to grow by. There's going to be so many more tasks now that can be done and executed, and we can produce so much more with this technology as it goes on and gets better. I mean, as a civilization, especially in the past 100 years, everybody's always talked about having a robot. Everybody's always talked about, we're going to be like the Jetsons in the future, or something along those lines. And every day we're getting closer and closer to that. If you look at the Tesla Optimus robots, and if you look at the robots from other companies, they're getting more real and real, kind of like the robot on this screen. Even they're getting a lot more real. So, and once they get part of the workplace and once they get part of everyday life, there's going to be so much more work done with these things. It's going to be amazing to see what that's gonna do. And this slide just kind of shows that the amount of productivity per year, that's going to increase from AI is insane. I mean, this year's 2025, 0.3%, 2026, 0.5, 0.7, 0.9, 1.3, 1.8, 2.4, 3.1, 4.0, 5.0. And that's not the cumulative. That's every year. Like, we're getting 0.3% growth 2025 alone. 2026, 0.5, and it's almost doubling every year. 2034, we're getting a 5% increase. So the sheer amount of productivity growth is going to be insane. And these are from the sources from McKinsey Group, Goldman Sachs, and JP Morgan. I mean, this is the averages of all what they say. And it's over the next 10 years, it's going to be a lot. I don't think people realize how much having AI robots and all that is what's going to do to the economy, and how much productivity we're going to have from it. Because it's honestly going to be pretty revolutionary if things keep pace at what they're at, and how fast people are getting with these technologies. I mean, it's pretty amazing what you see from these what we got now, self-driving cars, and these robots that can do all these tasks. It's going to be hard to imagine seeing a bunch of warehouse workers be robots in the future, potentially. That's just going to be otherworldly. And then having them work 24/7 at whatever task they're going to do, that the demand for it's just going to keep going and going. And this is partially why that NVIDIA has been doing so well over the past 5 years. Chips are important, for all these products. And so people are seeing this potential growth that's forecasted, and they know that these chips are going to be needed, and these chips are also getting better and better by the day. And that's mostly why people are getting really excited about this. And it's be really interesting to see what happens in the future for AI, and how far we're going to get with it. And this kind of gets into tying in what I said before. Cost cutting is obviously gonna reduce a lot, as you can see in this photo of a robot taping a box up. They'll no longer have to be someone that's taping up the box. It's gonna be a robot now. Especially these simpler jobs like taping up a box, part of the assembly line process. One person tapes up, one person staples, one person fills the box. Especially those kind of tasks are going to be done by robots more and more, but you know, they're going to get a lot more efficient, essentially. Companies are going to get a lot more efficient. Companies are going to be able to produce a lot more, and companies are going to be able to potentially grow that much faster. So it'll be interesting to see how far that will go and where it's going to go and where it's going to exactly land. And this chart just kind of shows how much potential cost reduction, at least is projected from McKinsey over the next 5 years. So, we'll see. This shows per industry, by the way, and the estimated reduction over time and whatnot. So, by 2030, customer service is going to see a 35% reduction. And I feel like most people know why that's going to see a 35% reduction. And that's because almost every company now that you get on the phone with, they're already automated. Like, you call into 800 number for, let's say, like you're trying to get customer service at your local auto dealership. More and more of them now are kind of having a robot that's answering that phone and walking you through the process of setting up an appointment to get your car checked out. More and more of that's happening, and that's happening in other industries as well. Probably a lot in healthcare, probably a lot like I said, car industry, for their services, especially a lot of the service industry. Booking those appointments and etc. and making that call to set that up. And I could see that happening, especially considering that has been outsourced in the past a lot. And manufacturing obviously is going to go down a lot. The cost of it, at least. I'm not surprised that's going down, just because that obviously the previous photo showed that, where the robot taping up the box and whatnot. But the robots in the manufacturing are going to be doing a lot in the future. They're going to be doing so many things that most of us aren't going to be really able to imagine. And transportation, I feel like that's definitely going to go down a lot in cost. 28%. I'm not surprised that that's going to go down, which is good. A lot of people are actually looking forward to that. A lot of people will be looking forward to transportation going down in price over time. And that's honestly because of probably looking at companies like Tesla and Waymo, with all these self-driving cars. It's going to be something else to see what they do over the next 5-10 years. Imagine a future where we don't have to have a car. Potentially we could be going into a future where, if the self-driving cars become a success, there's going to be a point in the future where most of us won't need a car, even in the rural areas and the suburban areas, potentially even. Obviously the city, a lot of people don't have a car in the city now, but it will be even less needed, because there'll be a chance in the future where people will be able to go on their phone and click a button and get that car shown up at in front of their house before they know it, and take that car wherever they need to go. And that car won't need to pay someone, like Uber or Lyft. Like, you won't need to pay that driver. You won't have to, that cost for that transportation, it won't be needed to do that. So that'll be an interesting future when that time comes. Retail will go down by 25%. Finance 22%, and we already see a lot of automation from that. Healthcare 20%. Healthcare is actually very interesting to see how AI is going to get a play in that. Agriculture already honestly uses a lot of automation, surprising amounts of automation. There was a time years ago where people were concerned where the growth of the population may be so much to where we may not have enough food for everybody, and but over time, less and less people were needed for to make these foods. I mean, there was a time where people were really worried about how fast the population was growing and the fact that there may not be enough farmers in the future to feed everyone. And that was, many years ago, when a large portion of the population was farmers slash, people growing crops. But over time, with the advancement in technology, less and less people have been farming the farmlands for the people. There's only like a few percents of the population actually are people in agriculture and farmers now, whereas 100 years ago it was like half the population. And so with the advancements and technology, less and less people were needed for that. And with AI, there's going to be even less people needed for that. There's going to be more cost cutting for it. So there's going to be less and less people over time potentially that are going to be farmers. So we'll see where that goes. Construction is down by 17%. Hospitality down by 15%. Education is one of the lowest, down by 12%. So we'll see how that goes. I feel like most people kind of imagine education going down because they see like some sort of robot in front of the class teaching everybody and kind of drawing stuff on the board and whatnot. And I don't know if that'll happen in 2030, but we'll see. We'll see how fast things go. That's probably later on down the line, but that'll be interesting to see as well. And this hops into the healthcare aspect I mentioned earlier, where AI in healthcare could be relatively a large thing, because right now a lot of people use ChatGPT for a lot of healthcare stuff. Now, whether it's dead on correct or not, is up to the person. But the fact that you can put your symptoms into AI or ChatGPT, Grok, whatever you use, and it spits back out, oh, you probably have this and whatnot based off your symptoms. It really is something else. And so doctors, a lot of people too say like, oh, doctors will be put out of business, but I don't think that's going to happen. I don't think doctors will be put out of business or anything. But it'd be very interesting to see like how people get diagnosed in the future because of AI now. Maybe people will lower the amounts of walking in because they'll be able to screen themselves from home instead of screening themselves when they get to the doctor's office, and there won't be as many people in the doctor's office, lowering the weight of how much people are coming in. Because we saw that a lot in COVID, where almost every doctor's office was overloaded with people, and I can only imagine how much less people there would have been if there was a lot of screening. Where we had this system where people could screen at home and not have to go to the doctor's office, because obviously during that time a lot of people had a heightened sense of being scared and thinking that their lives and health was at stake. And so it'd been really interesting to see if what would happen if we had that at that time. And so that could be something very good if that were to happen, though. And this chart just kind of goes into how much is going to be spent per year into healthcare from the AI perspective and the growth of it over time. And you could see that it goes up about like 20% or so every year, which is a lot. I mean, that's a huge increase every year. More and more money is going to be poured into it to develop these processes or these technologies to help people and diagnose them better and quicker, and help them a lot sooner, and maybe even do a lot better with preventative measures. You know, I mean, people now can potentially even, you know, look up how to prevent and best way to alleviate certain pains and whatnot, even simple ones at home. You know, best ways to heal from sunburn or whatnot, like simpler ones, or poison ivy or something like that. You know, and that'd be very useful for a lot of people. And obviously on the higher end stuff, how to figure that out as well. But helping out, screening out a lot of majority of the lower end stuff will be really, really, really helpful for hospitals for the most part. And here's another sector I want to get into as well, following healthcare. That was also on that chart, finance. AI and finance and robots have been a huge thing in the past years for tech. There's a lot of AI in high frequency trading. There's a lot of AI and even wealth management as well. There's a lot of AI giving people advice, what to invest in, as in what's safe, what's not safe, how safe is a bond, how safe is a stock, how safe is a mutual fund, how safe is an index, and then AI can also tell you, if I'm this age, what percentages of my portfolio I should have this and this and this. If I want to have a more aggressive but also balanced portfolio. And so, and how they could do that if they're going to individually invest. And so, this could really affect wealth management, financial advisors. Obviously, it could affect other areas as well, as to what I'm about to get into right after this. Actually, I'll bring it up right now. So this chart shows, this is from the BLS, showing the decline of stockbrokers over the next 10 years. So this is an index based off 100. And so the employment of stockbrokers are going to go down a lot. It's going to go from 100 in 2025 to a 65 in 2034. So becoming a stockbroker in the future may not be the greatest idea, just because it might get cut in half over the next 10 years. So if people have aspirations to be a stockbroker, this data may, affect that, or might potentially happen. So, and this is more so honestly because the zero cost trades, like what's on Robinhood right now. And so what's happening is, when Robinhood came out that years ago, now you have these other brokers that are doing it as well to compete with Robinhood. And so obviously when you take commission out of a sale of a stock, you kind of hurt how much brokers get paid. And so, brokers are now getting affected from that, but now brokers are also going to get affected by, AI potentially replacing their job, because they'll automate the transaction of the sale of the stock. So those are going to get affected a lot. And this chart just also goes into the percentage of how much, percentage of total trades that are robots versus humans. So right now, though, there is a lot already in 2025. About 65% of all trades right now are algorithmic or AI trading as of now. So there already is a whole bunch of algorithmic, artificial intelligence trading going on right now, and over time it's just going to increase more and more and more. And over time it's going to get harder and harder for people, if they are traders or day traders. It's going to get harder and harder over time, because now you're going to be trying to beat a robot, which is gonna make things pretty difficult for most people. And by projected, at least, this is a projection from the from J.P. Morgan, Bloomberg, and some other sources. But by 2034, were, expected 88%. So only 12% of total trades in about 10 years, are going to be, from AI. So we'll, that'll be a lot. And so I just want to end on the fact that if you really like this video, please like the video, please subscribe to the channel. And, I just really wanted to go over how much AI was going to really affect the overall market, how much, impact it was going to have, and, what it's going to look like 10 years from now, like how much growth are we going to really see from it, down the line, and why people are investing so much into AI right now, with Nvidia as of late, crossing 4 trillion in size and market cap, so, and obviously, Tesla's benefiting off that as well. So, but yeah, so if you like the video, please subscribe and see ya.